So I was not planning on doing another live stream this week, but things can and do change, and sometimes because my podcast is large and I'm reaching out to people, making new contacts and things like that, some information just falls on my lap. So I thought I would share some of this new information with you guys. I think it's potentially eye-opening for some of you, especially ones in the Austrian school, alternative media, and gold community that believe that China is the far superior economy because they're producing stuff. So I believe my source is credible. My source visits China once a year and is there for over a month each year. And they visit a lot of different factories in a lot of different cities in China, including Hong Kong, which is obviously not in the mainland. But they negotiate with factory owners to buy things from them. And so what my source told me was that very interesting things was that basically the Chinese banking system is bailing out a lot of Chinese factory owners. So the Peter Schiffs of the world, a lot of the people in the gold community who are saying China's in much better shape than the US and a lot of other countries because they're producing stuff. They're working hard, they're manufacturing. Well, not if the Chinese government and Chinese banking system are intentionally not calling in the loans, intentionally bailing out the factory owners so they can produce stuff that no one wants. And basically what my source told me was that there is massive overcapacity, massive inventory buildup, and there is really no cutbacks in a lot of stuff that the Chinese factory owners are making. So basically, you have the Chinese factory owners, and my source said they were told by their bankers to, even though they have, can't pay the loan and are basically insolvent or bankrupt, to keep producing. Why? Because this will allow the Chinese factory owners to keep paying the factory workers. And so the factory workers need jobs, the factory workers need food. And I basically, on my conversation with my source, it basically sounds like the factory owners are more scared of the factory workers killing or murdering them in some type of revolt than the bankers, bankrupting them, calling in the loans. So from what I've heard from my source, there is some manufactured products in China where there are 20 factories or more, all producing the same like consumer good or trinket that's cheap and breaks, and there's little or no demand for it, and they have not cut production. So inventory is just piling up. And my source said that basically the negotiations were very easy. And my source also said that this has been going on for the last 2 or 3 years, and that conveniently a lot of the people in China, the factory owners and a lot of the other people they talk to on their trips to China, are blaming Trump. Even before President Trump actually won the 2016 election, Trump was being blamed. So basically, China, I would say China is a house of cards compared to what a lot of people like Peter Schiff. Remember, Peter Schiff was saying that China was going to decouple from the rest of the global economy because they actually worked hard and produced stuff. So yes, China is accumulating lots of physical gold. However, now China has a really bad credit problem. And the people who are saying that China is in better shape with their economy because they produce stuff, well, they're not producing stuff the market wants. There's overcapacity there. And from what my source says, who I believe is credible, is saying that basically the factory owners are being bailed out because the government and the banking system are totally worried about a revolution from the factory workers if they're not getting their wages and not having enough RMB to put food on the table. So hopefully some of you guys will be more open to that idea. I know there's a lot of people in the alternative media and gold community, even some libertarians and free market people, that think no matter what, China is better than a lot of other governments and economies, especially the US. And I'm just telling you that, things have changed in China. There's a rising, if you look at the YouTube channels for Sir Pensa and the other guy that does the motorcycle channel where they have conversations on motorcycles in China and record it, there's a rising xenophobia in China, especially anti-American, and a lot of American businessmen are leaving China. But basically, if a lot of the stuff my source says is true, then China basically is a house of cards at this point. But I think the Chinese government will probably be able to engineer some type of Japan landing because there's manipulation and there's a lot of the Chinese citizens go along with the government. So they may ignore some of the stuff that the government says, but ultimately, that's why a lot of people in China are not holding RMB. They're buying real stuff. They're getting their currency, their RMB, out into dollars and euros, and then buying real estate, gold, art, other types of real assets with that. So a lot of people in China, the argument would be that if China is such a great economic success story still and is in such good shape, why are so many people inside China not buying and holding RMB? So take my information with a grain of salt, but I think my source is credible. And my source is continuing to go to China every year. And hopefully I will get a report back. But it sounds like over the last 2 or 3 years, things have gotten a lot worse in China. And I'm not sure all this information is disseminated out there. So China has, most people are not aware of this, China has almost a 400%, it's around 400% debt to GDP ratio. Their GDP, I think, is around $12 trillion. And they have around a $50 trillion credit bubble at this point in US dollar terms. And from basically, if my source is correct, it sounds like the banking system, the bankers, Chinese bankers, which are state-owned, owned by the government, as long as the debt is in RMB terms and not in dollar terms, they can work with the people who have the debt and either forgive the debt, print more money, bailouts, etc. So China may have a lot more stagflation, and obviously there's a lot of misallocation of capital there. But basically at this point, a lot of the factories are essentially no better. They're not real private sector, hardworking, like what free market or Austrian school would say. They're more of like a Keynesian ditch digging jobs program. So at one point, they may have been productive private sector factories actually making things that a lot of the market demanded. But in the last 2 or 3 years, it seems that has changed. So that's one of the main reasons I did this short little video. For today's show, I'm not going to do a full show. A couple other things I wanted to cover. So I forgot to, on the last live stream show this week, mention CNBC's Brian Kelly. So for years, he wrote a stupid Bitcoin book that has really bad reviews. Also, he's been their token, like, crypto pumper on all the different shows. Brian Kelly, BK Capital. And basically, he's been pumping Bitcoin and crypto for years now, seeing higher and higher prices. At one point, I think earlier this year, when Bitcoin crashed, he might have said he put 90% of all his net worth into Bitcoin and other cryptocurrency. And recently it came out, he admitted, and Peter Schiff talked about this, that Brian Kelly admitted on live television on CNBC, because he's on there every day, that he had secretly been dumping all of his cryptocurrency and he was net short. So I think, best case scenario for him, that's extremely unethical. Extremely, extremely unethical. And that's the best case scenario. But worst case scenario for him, a lot of people have a legitimate case to sue him based on what he said on CNBC. And he should be looking at SEC or other charges for pump and dump. Best case scenario, the guy's a scumbag and very, very unethical. Best case scenario. Worst case scenario, he's an outright criminal, what he did. Going on live TV every day and pumping things, totally lying while he was secretly dumping. Very unethical. Probably shouldn't be working in the financial industry anymore, and yet he'll probably be on CNBC every single day collecting his 6-figure check or whatever, or helping market his fund. Meanwhile, he should be bankrupt and or sued and or in prison. Okay, a couple other things I wanted to cover in this short little show. The other thing I want you guys to check out, since I'm all about making sure you guys get the best possible information, Stanley Druckenmiller did an interview for an hour on Bloomberg this week. So the Bloomberg journalist, and I'm using air quotes, actually didn't interrupt him this time. Normally, that guy who does those interviews, he's a pretty bad journalist, and he interrupts good guests like Ray Dalio and Druckenmiller and those guys all the damn time, and you can't learn anything from them. But this was actually a really good 60-minute interview. You can look it up on the YouTube channel on Bloomberg Market and Finance for free. It's also in the Wall Street for Main Street Facebook group. Druckenmiller also mentioned a Financial Times article. I think you have to have a subscription for that came out this week. And the Financial Times article talks about U.S. credit markets drying up as volatility rattles investors. So if I could just summarize that article really, really quickly, what I would tell you, if you don't want to pay to read the article or can't read it, I think you can maybe, if you click on the Twitter link, you can probably read it for free still. But basically, it sounds like a lot of these investment banks that normally sell like tranches or do deals for high yield debt, that has basically dried up or collapsed. And so these investment banks and, like Bank of America's investment banking arm and Wells Fargo and, some of the Morgan Stanley and Goldman Sachs, those guys, they're having enormous problems unloading these high yield debt deals. And the banks have actually had to carry these high yield debt on their balance sheet, which is another warning sign. And also another thing I've noticed too is that I've actually never heard more bank employees like working for Wall Street investment banks or larger banks from the credit department come and say in the last couple weeks, normally you would never hear them come out and say this, that this is the end of a credit cycle. So I think that's another red flag. But the stock market, like I said in the last live stream show, now it's starting to get weaker and weaker. So the stock market will not crash immediately, but it's going to continue probably to test different support levels and move down. And eventually it will hit like an air pocket and gap down. So if you look at the support levels on the charts for like the Dow and the S&P, you'll be able to tell where the major support levels are. And eventually, as it breaks more and more support levels, the selling will feed on itself. And it will eventually, probably sometime in mid to third quarter 2019, it will gap down at some point, unless something reverses. Something like I discussed in the last live stream show reverses. But normally, though, with a lot of stock markets, it's sell in May and go away. So if there's not a stock market crash before May, before May 2019, it will probably be delayed until at least September, until at least after Labor Day. That's normally, historically, how stock market crashes work. And finally, the other thing I wanted to discuss on this short little live stream show was there was a listener question in the comment section on the last one about oil and gas plays. And I forgot to mention this. I obviously, as you guys know, was an oil and gas analyst for a while in the past. So with the oil price basically continuing to go lower, there's different types of oil companies. You have the oil and gas producers, you have like pipeline companies, you have drilling companies or service companies, you have some gas station companies, and then finally you have oil refiners. And so the oil price actually going down actually historically benefits the oil refiners. Now, I was looking for a U.S. shale oil pure play, one that could buy extremely discounted oil that was close to the shale producers. And in the past, that used to be Western Refining, but Tesoro bought Western Refining in 2016. So there's not really a pure play for a lot of the refiners. I'm looking up some articles now. Valero, which is symbol VLO, Vicky, Larry, Oscar. Valero Energy is one of the largest and best balance sheet refineries. And there's articles on Seeking Alpha you could look up. But one guy at the end of October, this David Zanoni, says that Valero has a 50% upside. So there's Marathon Petroleum, Mike, Patrick, Charles, Philip 66, PSX, like PlayStation, and then X is in Xavier. And it outlines how basically the lower the oil price goes, the more it will benefit the refiners. So in general, refiners are not really excellent long-term businesses because when the oil price rises, they tend to have problems. Their input costs rise. And also oil refining in general is a very capital intensive business. There has to be like hundreds of millions, if not billions of dollars in maintenance capex invested into the business long term. But for the short term, as long as the oil price is in a downtrend, the oil refiners should be a pretty interesting trade on the long side compared to a lot of other companies in the oil space. So Chevron, I think, is probably the safest out of the largest oil companies, but the subsector of the oil industry that's actually benefiting from the lower oil prices right now, and most oil companies in the oil sector are not benefiting from a lower oil price, but the oil refiners at least temporarily are. So while the shale boom was going crazy and the oil price was going from, over $100 a barrel, and then it crashed over like a 3 or 4 year span down to in like 2014-ish, I think it crashed down to like 30 something or 40 something a barrel. That's when like Lynn Energy and those others started to go bankrupt. But the oil refiners, some of those shares were up over 100%. I think Western Refining went up over 400% from like 2009 to like 2014 or 15. It was one of the top performing stocks in only a couple years. Okay, so that's it for this short little live stream. I will take a couple listener questions and stuff. Questions and comments. Take a look really quick. R. N. Rousseau. Yes, and Peter Schiff is invested in China. He has a mutual fund of Chinese stocks. However, his Austrian school analysis of China is different than a lot of other Austrian school libertarian people. So he's not in the same camp as, say, me. My views have changed. I used to believe a lot of what Peter Schiff says. I think Peter's a brilliant guy. I just think he's wrong on China. Because remember what he said, China had, at one point he was saying that China had decoupled from the global economy and that they're producing their own goods, and that's better than consuming. But if you're producing things that no one wants and you're stacking inventory in empty warehouses, building new warehouses, stacking stuff to the ceiling, and your bankers have told you to keep producing so your own factory workers don't murder you, then I don't think that production is good. So yes, I think Peter is somewhat biased. He's made a lot of money. He's rich. Even though the gold price has not really done very much, I hear that Peter Schiff is worth over $50 million now. So he's done very well for himself. He's a brilliant Austrian school economist. He's just wrong on China. There are people, though, in my camp for Austrian school and libertarian, like Brent Johnson and Daniel Lacaille. And I think, like I said, the picture for China has changed a lot in the last 10 years. Their credit bubble and debt bubble has grown way faster than their gold holdings. China was in much better shape 10 years ago than they are now. They got greedy. So best case scenario for China is the type of landing, and I'm using air quotes, that Japan had 30 or 40 years ago. Worst case, I've heard some people say Soviet Union collapse, but I think China has so much control. Their citizens are so brainwashed. They do have a lot of gold. They do have a lot of assets. They did things with their central planning quite a bit different than the Soviet Union did. So I think China will escape the fate of the Soviet Union, at least for now. I do not think total collapse for China, even though they've misallocated, many trillions of dollars. Okay, looking at more listener questions and comments. R. Sinclair, Chinese are debt slaves like the rest of us. Yep, pretty much. Except I would say that a lot more Chinese have been brainwashed since birth, and now you have the implementation there of all those video cameras a lot more than the US already has. And you have the social credit score. So China, from what I hear from people who have visited China and friends who, like either expatriates, Americans who have moved to China or lived there for a while, is that a lot of China is already cashless. People use a lot of smartphone payments. And so their social credit score system, which is very totalitarian, very draconian, obviously anti-free speech, but that system, a lot of people are accepting that system. You do not have a lot of rabble-rousers and protesters protesting against the social credit score system. And I hope to God that does not come to the U.S., but you already have these techno-fascist technology companies that are implementing something similar without the government doing full. I mean, President Trump, what he should be, Mike Cernovich brings this up, President Trump should be protecting his supporters from what the big technology and big social media companies are doing to them online. I mean, they're ruining some people financially who had businesses and jobs. And President Trump isn't protecting any of his constituents that way. And he's pissing a lot of people off in that regard. He needs to take care of that quickly. But, the techno-fascists here and the big technology companies, they're trying to make sure that future congressional and presidential elections, that the the Republicans or pro-Trump or whatever third party comes in the near future, because it's for sure not going to be the Libertarian Party, because that's a disaster. Sounds like other people are trying to start a third party, though. But the people in power, the globalists, they want the Democrats to win, and they're pulling out all the stops with the social media to make sure that people who have a voice don't get heard online. Especially on my YouTube channel here, but there's tons of other examples of this. I mean, I think I produce pretty good content, and my views per video are down to 1,000 per video. Hey, Scott, you said that China can kiss your ass. You can't stand them. Donations to the Clinton Foundation got China into the World Economic Organization. Clinton screwed us again. Well, what most people don't know is that the Chinese were donating tons and tons of money to Bill Clinton while he was in the White House, so he was getting bribed. And there's also a book out by Peter Schweitzer talking about how China bribes tons of politicians in both political parties, and they also bribe like people in economic think tanks, like the wife of like the main couple of the main economic think tanks here in the Washington, D.C. metro area. The wives are paid like $500,000 per year by the Chinese government to tutor a kid in English. It's a straight up hustle or bribe. And China hasn't complied with any of the World Trade Organization stuff. So they've gotten exemptions. They've been cheating for a long time. They've been stealing intellectual property and research and development. But I can tell you that a lot of their production is garbage now. So the Austrian economists who are saying, and China also has, that skyscraper curse and the housing bubble. There was just a new video out recently saying that, I posted in the Wall Street for Main Street Facebook group. I forgot the guy's name who posted the video, but it's only like 12 minutes long, and he says that there is at least 50 million empty homes in China and growing. He said the construction is still ongoing. There's already 50 million empty homes in China, and property prices have not collapsed yet. And he said a lot of Chinese, the housing bubble is so crazy in China that a lot of middle class, upper middle class, and affluent Chinese own 3 homes or more as investments because they won't put the money in the bank. And they know that the currency, the RMB, is being devalued intentionally. I don't think he put that the RMB is being devalued intentionally. I'll add that. Hey, buy 100-ounce silver. Peter Schiff is a superb Austrian school economist, and he is a superb marketer. Peter Schiff is the best in the space at marketing, because even though the gold and silver price have done nothing or dropped, and the mining stocks, a lot of them that he's recommended have done garbage, Peter Schiff is still worth, his net worth has gone from maybe a couple $1 million before the 2008 financial crisis to over $50 million now, from what I hear. But I really respect Peter. I just think he's wrong about China. China is doing that. China building towns and police stations in Africa for their workers, even have their police working in Africa. Yeah, it's to protect their investments in natural resources. They want control of metals, oil and gas. China has really, really serious air, water, and soil problems. And so they cannot grow enough of their own food to feed their own population, so they have to import tons of food. Which is why, this thing with the soybeans, they were eventually going to have to rebuy. Now, they may take breaks to stick it to President Trump and the American soybean farmers, but eventually they're going to have to buy. They're going to have to buy some type of food from somewhere. Now, maybe Brazil will benefit more. Hey, Scott, Peter Schiff was the one who pointed out on his Twitter feed that Brian Kelly should be fired from CNBC and or go to prison. Remember, Peter Schiff is anti-Bitcoin because Trace Meyer met Peter Schiff when Bitcoin was around $1 and told him to buy a couple thousand, and Peter Schiff told him to go pound sand. The other interesting thing to watch is the whiskey stocks. So earlier in the year, the European Union put retaliatory tariffs on American whiskey, and basically I think there's at least a 25% tariff now on all European Union countries, and I think the UK, importing American whiskey. So that was in a retaliatory tariff for President Trump, putting tariffs on European steel and some other European goods. And so far, the alcohol stocks, like Diageo and others, I think Diageo owns 5 American whiskey brands. So far, that has not affected them yet. But probably in the next 6 months or a year, that's going to really hurt sales, that extra price increase for whiskey. So that's something else to watch with the trade war. But I think the trade war is going to escalate, and I just wanted to get this China information out there for you guys. I'm done with this short little show for today. Get you guys a little update. Make sure you get the best information possible. And so I think, things in China are nowhere near as good as they seem. With that being said, I do not think China will totally collapse. I think the Chinese Communist Party has so much power and so much control over their own citizens with brainwashing that they can get away with a lot. So I think China will continue the system as is, and I think this means, as long as they're printing more RMB and credit, creating more credit, there's going to be attempts to get that money by the Chinese business owner, small, medium, and large business owner, or economic and political elites in China, or really rich people in China, to get that RMB out of the country as quickly as possible and can either launder it, pay a 40% fee like Miles Kwok was suggesting in his Real Vision television interview with Kyle Bass a month or two ago, and get that into either dollars or euros, and then after that, get it into real assets as quickly as possible. Okay, guys, that's it for now. I have an interview with Phil Kennedy coming up in a little bit. I just want to get this quick little update video out there. Okay, bye.